Okay, very good. Welcome to today's class.
Thank you.
So we'll be looking at 9:30 opening price on Nasdaq, the price movement that plays out during the opening price by 9:30 a.m. New York time. So as the index market opens by 9:30, that's New York time, because the algo works with New York time. Hope you have set your time to New York.
No, no, no.
By the left side, you will see it. This electronic trade, this regular trading. This is your time. You set it to New York time. Okay. So
Please,
now
can you go back? I'm not seeing it.
you click on that time zone. You select New York.
Okay,
Yeah, very good. So here on every 9:30 opening price, which is the opening price,
okay,
yeah, price normally tend like seek for a liquidity on opening price. So what we are looking after is the first liquidity price is going to take at that time of the day by 9:30 a.m. here on 15 minutes, this 15 minutes chart. So you have patience for price to take out a liquidity. Here is a liquidity resting above. Here is a buy side liquidity. Buy side liquidity purge during the 9:30 a.m. This is the 9:30 candle, the bearish candle there. As a bearish candle normally open from above and close below. At 9:30, there is a fair value gap. Here is a fair value gap created already before 9:30 opening. This is a candle, 9:30 open. Look below my screen, you see the time. At
okay,
9:30, yeah, if price delivered inside an inefficiency, then you look for a liquidity resting above. If you are bullish, you look for a liquidity resting above. You wait for price to take the liquidity going into 10 o'clock, because 9:30 starts the price movement going into 10 to 11 a.m. macro. That's the silver bullet, AM session, silver bullet. So what you are looking after is for a liquidity to be taken, which is done here. This is a liquidity resting above on Friday, this last week Friday. Price drop, this is a displacement. This is a 9:30 opening gap. The low of it has been taken. That's displacement. This is a displacement candle. While there, this is the Judah swing high that took out the buy side liquidity here above. After a swing high comes a Judah's a displacement taking out the low of the 9:30 low, then create a fair value gap. This candle is 10 o'clock candle that took out the low of the 9:30. 9:30 opening gap. If there is other block, here is an other block. Other block in any opening price is a strong resistance or support level. If we are bearish, it will act as a strong resistance level. The 50% of it, that's the main threshold of the other block. To get the 50%, that's the main threshold. You measure this is the other block from the opening to the close of the candle. That's how you can get your other block main threshold. That's the 50% of the order block. From the opening of the body to the close of the body, that's the order block, the 9:30 opening price candle. You can see that's the ment ratio, the 50% of the Fibonacci. That's where price traded to. At what time of the day? 11:45. The displacement candle is the 10 o'clock candle, then created a fair value gap. After a displacement, is there any fair value gap? Yes, there is a fair value gap. So what you'll be looking after during the 9:30 opening price is for a liquidity. If we have a liquidity resting above and price delivered inside an inefficiency or took out a low, then you look for next draw on liquidity resting above, which is this. Okay, so after the displacement candle, this is the displacement candle that took out the low of the 9:30 opening price and created a fair value gap. The fair value gap, the first fair value gap in opening price between 9:30 to 10 o'clock. So you utilize the fair value gap. This is the inefficiency. Is to be acting as a major support or resistance level. If we are bearish, like we are bearish here, it will act as a resistance. Here is a premium level. Then you look for a liquidity. Let's draw on liquidity for your take profit. From 10 o'clock to 11 macro, going into 2 o'clock to 3 p.m. silver bullet. That's launch session. This 1 o'clock, 1:30, going into 2 o'clock silver bullet. So that's how you can anticipate the 9:30 opening price. It plays out almost every day. So you know what you are looking for. First of all, you need to have narrative of where price is going. You have to have narrative of where price is going, the price movement, which liquidity is going to seek for inefficiency is going to deliver into. So by this time of the day, 9:30, you look for a liquidity price is going to take at that moment during the opening price. At that block when threshold is 9:30 opening Friday last week. So you look for an efficiency CB, a major resistance. This is a 2022 model. Did we take out a high, a buy side liquidity? Yes. A displacement? Yes. This is a displacement candle. Is there any fair value gap? Yes. Wait for price to trade inside that fair value gap. That's it. Then you look for next draw on liquidity. You can take your profit below here, or you can wait
I'm not
for.
hearing you. The network is bad.
Yeah, this I say that to anticipate the 9:30 opening price, New York opening price, you look for the first liquidity price is going to take at that moment. In every opening price, in every key zone, that's opening price key zone, price is going to seek for a liquidity. It's either a liquidity resting above or a liquidity resting below at that time of the day. Okay,
Okay.
so once price took out a liquidity at that moment, you wait for price to create a displacement and a fair value gap, which is this now. This is the fair value gap. The first fair value gap in opening price between 9:30 to 10 o'clock, you are going to utilize that fair value gap is going to stand as a major support or resistance level. So you have narrative of where price is going first. That's the first thing. Where is price going to? Is this selling or buying? So you have narrative of where price action is going first. So once that is done, once you see a displacement and a fair value gap, wait for price to trade inside the fair value gap. This is the 10 to 11 macro. This 11:30, 11:45. So utilize this fair value gap here, CB. Then you can put your stop loss above here, above this other block, last close candle. You can take your profit below here or wait for full pull. But always seek for partial. You go for partial, you can take your partial here. First partial at this low. First partial, first profit. Then you can take your second profit below here. Then your third profit, that's full pull. You can take your third profit here. So you look out for this price.
That means the third profit is buying.
The third profit, that's the low of this range. From this low to the high here, this is the low of the range. And during the 9:30 opening price took out the high. So you seek for the low of it, which is here. Here is the low. You swing from this low here to the high, the whole range. You can measure it and see the equilibrium. That's the 50% of the range. That is the 50% of this range. The equilibrium is the half of this range. You can see at the equilibrium, you expect a breakaway gap. You anticipate a breakaway gap at every equilibrium. There is a breakaway gap. That's the half of this range from the low, from this candle here, the low of it to the high of this candle. Before we took it, price took it out at 9:30 opening price. During 9:30 opening price swept it out, then create a fair value gap here at 10 o'clock. So utilizing this fair value gap, you wait, because you have to have patience. You have to have patience. It's patience that will save you here. You have to have patience to see what you are looking for. Not every movement you will just enter. So you have patience to see what you are looking for. You wait for price to deliver inside this fair value gap. Fair value gap is a starting point where a macro start to spool. So you wait for price to deliver inside the fair value gap. You can put your stop loss above here. The candle that took out the high at the 9:30 opening price. The high here, this is the high. You can put your stop loss here. You can take your first partial, second partial, that's profit, then the third partial. After breaking the equilibrium, the half of the range with a breakaway gap. So you can see this is a breakaway gap that break below the equilibrium that took out this low. This is a major low. So this is a breaker. This stands as a breaker. This candle here, the bearish candle, is a breaker. No other candle have break below it. This is higher than this. This low is higher than this low. No other candle have come across it yet until during the 9:30 opening price movement going into 2 to 3 o'clock silver bullet is a macro too. So we seek out for the low, the previous last close candle low. Okay. That's how you anticipate the 9:30 opening price.
Okay.
Yeah, every day it happen. This price movement plays out every day at the opening price. We could be bullish. It's not always bearish because this Friday. Friday is going to seek for the 25% and 35% level of the Fibonacci for the whole week, the whole week range, the 25% and 35% range for the whole week on Fridays only. So you wait for price to deliver inside this 10 o'clock fair value gap CB, then you can sell off. Once price deliver inside it, you can sell, put your stop loss above here. The candle that swept
How will
the buy side liquidity during
how
the
how will you know that price has delivered into the fair value gap?
inside the fair value gap, you will see the candle body close inside it. As you have seen this, you close inside it, it did not break above.
Okay.
We did not break above. You see the candle, the
Okay.
body, yeah, we did not break above it. Inside the CB, that's the fair value gap, is a major resistance. Since we do not break above it, it's a major resistance and it's the first fair value gap created between the 9:30 to 10 o'clock. It's going to act as a major support or resistance. The first fair value gap, okay?
Okay.
Yeah, the first fair value gap. So you look for you that's what you are your target. You look for the first fair value gap. Since we have taken a buy side liquidity resting above here and it's on Friday, then we drop. That's a displacement candle to take out the low of the 9:30 opening gap. It's a displacement. Then created a fair value gap by 10 o'clock. This 10 o'clock. Watch the candle, the time below. Friday, January 25th, 10 o'clock. That's 10 a.m. candle. Then yeah, this is the candle that created the fair value gap. This candle was rejected at the low of the first fair value gap. Then coming back to it is going to act as a resistance, as a major resistance, as a premium level. Here is a premium level. So you seek for a discount level which is below, premium above, discount below, and we break below the equilibrium. That's between this low and this high, the range, the price movement which I measure out with your Fibonacci here. Use your Fibonacci to measure it. This is the high. Between the high of the candle and the low here, use your Fibonacci. This is 50%. 50% stands as equilibrium. That's half of this range. You are broke below it with a breakaway gap. This is a breakaway gap. It cannot be filled up yet. Taking out this low here, which is the breaker. This candle acts as a breaker now. It's standing as a breaker. We are break below it. Okay.
Okay.
Yeah. So is there any question?
Yes, yes.
Yeah, go ahead.
This equilibrium, this 50%, that's equilibrium.
Yeah.
Yeah, the high of it.
The high of it,
Yes.
okay, is this candle, the high here.
Yes.
So
How can you identify it?
okay, good. How to identify it? You have to measure a price range from the low to the highest high. This is the highest high before we took it out by 9:30 a.m. Here is the highest high before we drop. Going into 9:30 a.m., the opening price, New York opening price, we took it out because here was the highest high before this high here. Is that clear?
Okay, yeah.
Yeah, here is the highest high before going into the New York opening price 9:30. and it's the next liquidity to be taken. Then
Okay.
after we took it out, you see we drop. That one makes the highest high from the low here. Here is the low. This candle, the wick of it, the low of it to the high of it. That's the equilibrium. To get the equilibrium, the 50% of the range of this whole range. As any equilibrium, you will anticipate you'll be seeing a breakaway gap like this. If you are to break an equilibrium, that's 50% of a range, you'll be anticipating a breakaway gap like this. Here we took out this low here. This is a bearish breaker. It's a bearish breaker. The last close candle. You see why it's a breaker? You drop and was rejected. It's standing as other block here. The other block is a major support level. Here is a like discount area, and we break below it now. It's acting as a premium area. Price coming up here again, it will act as a resistance. It will be acting as a support level here. Then we break below it with a breakaway gap. So price retesting back, redelivering inside it to feed this inefficiency. It will act as a premium level. Okay.
Okay.
Yeah, it's a breaker. It's acting as a breaker now. This low here, the bearish candle is acting as a low. So price coming back to it now, it will act as a resistance. That's premium. No more discount. It's going to act as a premium level. Then we seek for
Okay.
a discount below. So coming today being Monday, here is the break new week opening gap. I've thought about this new week opening gap. The gap between where we stop trading on Friday, this is a Friday candle, and the gap between where we open on Sunday midnight, this Sunday midnight candle. You can see the time below the screen. That's new week opening gap.
Okay.
This is how to measure it out. If you want to annotate it from the low of this Friday close, then the high of the Sunday open. This high of the Sunday open becomes our new week opening gap low, while the Friday becomes our new week opening gap high. So to get the 50% of this, as it stands now, is an inefficiency, it's a void. You can see there is a space there, a gap. There's no candle between them. It's a void. So to get the 50% of it, use your Fibonacci. You anchor from the opening on Sunday midnight to the high of the Friday close, the 50% level of Fibonacci. That's the consequent encroachment of the new week opening gap. You can remove your Fibonacci then. So any color you prefer to for yourself, that's okay. So going into New York opening price today, so we like to see what price is going to offer. For now, I'm not interested to anticipate price. Today is Monday already. So I'm not interested in what price is doing at the moment until 9:30 opening price. During 9:30 opening price, you will see an opportunity going into 10 to 11 a.m. silver bullet. You can anticipate and see a price movement. Going into, yeah, on daily, we have a this is a daily low. We have taken it now. It has been swept. Daily sell side liquidity, we have been swept. So price now, you don't know what price is going to do, but it will still try to go and deliver inside this new week opening gap. But for now, I'm not interested in price action now, only tape reading until 9:30 opening price. We have an inefficiency here. Inside this where price is still trading. The daily sell side liquidity has been taken. See, you are swept it. This is where you taking it. You break below it, it's going to act as a resistance level now. You are break below it. So not going to anticipate anything or trade anything until 9:30. If I don't see any setup during the 9:30, no problem. Tomorrow I come back again. Not going to force trade or anything. So
I
if
don't understand. Can you explain more on that?
yeah, when you don't see a setup, maybe a high probability setup, what we are looking for, you don't have to push your button or force yourself to enter trade. You just have to have patience. Then you come another day, you will see a setup. Okay,
Like, how is the setup?
maybe the 9:30 opening price, if you want to anticipate it, going
So
to
that 9:30 you're talking about, that time below there, that is the 9:30 of that time, right?
that night
That time 5:30. I'm seeing 5:30 there.
night which 5:30 where
Down, down.
Dan,
Yes.
this yeah, this morning now, this okay,
Yeah.
this time,
Yes.
yeah,
That's what I mean. The
yeah,
9:30.
yeah, it will write 9:30. This is New York time. It's still five
Okay.
o'clock, yeah, because during this 5 o'clock, price is not going to be stable like that until 9:30 opening price. Then the first 30 minutes after 9:30 opening price, going into 10 o'clock to 11 o'clock silver bullet, you will see a setup.
Okay. Like setup, like how? How will it be?
A high probability now, it will see a displacement. May you see something, a liquidity taking, then a displacement, that is Judas swing high or low that swept a liquidity below or above, then a displacement that then creates a fair value gap. But you have to have narrative of where price is going first. The next draw
Okay.
on liquidity, price is going to seek for. So once you see know all that, then you wait for a fair value gap to be created, then wait for price to deliver inside it. If you are bullish, if you are bearish, you put your stop loss above the other block, this other block, last up close candle. You put your stop loss above, then you look for next draw on liquidity below. Then if you are bullish, you put your stop loss below the other block that swept the liquidity, sell side liquidity during the night
That's the
time
last
opening
the
price.
last close up candle is the other plug.
Yes, above here, this other block. This is lower than this. So since we are bearish, we are looking at every bullish last close candle to act as an order block. Have you seen it? Every bullish last close candle to act as an order block. Okay,
Okay.
yeah. Is there any other question?
No, no, no. Every bullish last close candle.
Yes, it's an order block. If we are bearish, then if we are bullish, every bearish last close candle stand as an order block. When we are bullish, we see a higher high. Then if we are bearish, we see lower low as a price action. A lower low is, if we are bearish, price will be breaking below. Then if we are bullish, like this is a bullish trend, price will be breaking above. Above I mean like this, above, to breaking above.
Okay.
Yeah, to breaking above, to breaking above. Not the high, it will be breaking above them if we are bullish. If we are bearish, it will breaking below the last close candle. It break below it. It break below this. You can see it. It is breaking below. It's breaking below. That's bearish trend. Okay.
Okay.
Yeah. So that's it for today. You try and study and practice it back. You look for every 9:30 opening price. You can go to your 15-minute chart. 15-minute chart is perfectly okay.
Okay.
Yeah, but you can trade at any time frame to your own self. It's not more that it must be 15 minutes. You can decide to trade 4 hours. If you once you see a setup there that enables you to trade, you trade. It doesn't matter the time frame. It has a high probability win rate. You can enter and win. The most important thing, you are here to make money. That's it. It doesn't matter the time frame.
Okay.
Yeah. Okay. Yeah. Thanks for today. And be
Okay.
safe. Yeah.
Thank you. I appreciate.
You are welcome.
Uh,